Welcome back to Tesla Daily News Podcast. It's February 6th, 2026, and today we're talking about price-sensitive demand moves for Model Y in the US, a major shift in how Tesla is monetizing full self-driving, fresh political and regulatory pressure on autonomy, and the competitive reality check coming out of Europe and China. Let's get into the stories that matter for Tesla's business performance and what could move Tesla. Story 1. Tesla just added a cheaper all-wheel drive Model Y in the US, and that tells you a lot about demand. Here's the hook. Tesla is offering a new, cheaper Model Y all-wheel drive trim priced at $41,990. Context: when Tesla expands the lineup downward on price, it's usually a sign the company is trying to protect unit volume and keep factories utilized in a market where competition is intensifying and buyers are increasingly payment-sensitive. Details: multiple outlets are pointing to that $41,990 price point for the new all-wheel drive Model Y. The key is not just the sticker price, it's what this does to monthly affordability and how quickly Tesla can adjust configuration and pricing versus legacy automakers. Impact. For investors, the question is straightforward. Does this help deliveries without sacrificing too much margin? Lower price trims can support volume, which the market often rewards when it stabilizes growth expectations. But the trade-off is automotive gross margin pressure if Tesla has to keep stepping down price to compete. Takeaway: watch whether this trim becomes a meaningful mix shifter, meaning it changes the average selling price of Model Y. If it boosts orders materially, that can support near-term delivery momentum. If it just cannibalizes higher trims, it's mostly a margin story. Story 2. Tesla's full self-driving monetization is shifting harder towards subscriptions, and it's creating controversy. Hook. Tesla is pushing customers to buy full self-driving before February 14th, while also signaling a move to subscription-only in key ways. Context: software revenue is the holy grail for Tesla's valuation narrative, recurring revenue, high margins, and a pathway to a services-like multiple. But how Tesla structures ownership and transferability matters enormously for customer trust and long-term take rate. Details: Electrek reports Tesla sent emails urging owners to purchase full self-driving before February 14th as Tesla shifts toward a subscription-only model. The same reporting flags what looks like a policy change around whether full self-driving stays with the car or the owner, raising questions about resale value and customer expectations. Separately, a Turkish outlet reports that in new Model 3 and Model Y vehicles, Tesla disabled the previously included autopilot behavior in a way that effectively requires a full self-driving subscription to access features like auto steer, with pricing referenced at $99 per month. Impact: if Tesla can convert more of the fleet to recurring subscriptions, especially at around $100 per month, that can be meaningful high-margin revenue over time. But there are two risks. 1. Reputational and demand risk. If customers perceive the rules are changing after purchase, that can reduce future software attach rates. 2. Regulatory and litigation risk. Autonomy features are already under scrutiny, and aggressive monetization can bring more attention to what exactly the system does and how it's marketed. Takeaway: for Tesla, this is a classic near-term versus long-term tension. Subscriptions can smooth revenue and expand software gross profit, but heavy-handed policy shifts can backfire and slow adoption. Investors should watch for clear, consistent language from Tesla on ownership, transfer, and what is included as standard driver assistance. Story 3. Autonomy is back in Washington, and lawmakers are pressing Tesla on safety, liability, and the LiDAR question. Hook. Tesla and Waymo executives faced U.S. Senate questioning on self-driving safety, and the tone signals more oversight, not less. Context: the market's robotaxi thesis depends on two things: technical performance and regulatory permission. Even if the tech improves quickly, the pace of deployment can be capped by federal and state rules, investigations, and public sentiment. Details: CBS and The Verge both covered a Senate Commerce Committee hearing where lawmakers questioned Tesla and Waymo on safety incidents, liability, and whether the U.S. is falling behind China. One recurring point: skepticism about Tesla's approach, including the lack of LiDAR and what standards should exist for validating autonomous driving systems. There's also reporting via Slashdot linking to coverage that Tesla shares fell after senators voiced skepticism about full self-driving and Tesla's sensor choices. Impact: this matters for stock because the autonomy premium is a meaningful part of how many bulls justify Tesla's valuation relative to traditional automakers. Increased scrutiny can delay timelines, raise compliance costs, and amplify headline risk around crashes. Takeaway: watch for two things: any push for federal autonomy legislation and whether regulators start converging on standardized testing, reporting, or minimum sensor requirements. Even without new laws, The hearing itself can influence analyst assumptions about robotaxi timing. Story 4. Safety and crash headlines. A trapped driver's 911 call is a reminder of downside risk. Hook. A transcript describes a driver pleading for help after being trapped in a burning Model Y following a crash. Context. Tesla's brand and its autonomy story is sensitive to safety narratives. Individual incidents don't define overall safety performance, but they can trigger investigations, lawsuits, and negative press cycles that affect demand. Details. Insurance Journal reports the transcript of a 20-year-old's emergency call after an October crash involving a Tesla Model Y, with the driver saying he couldn't get out as the vehicle was on fire. Impact. On the business side, these stories can raise insurance cost concerns, increase regulatory attention, and weigh on brand perception, especially if they connect to design topics like door handles, emergency egress, or post-crash power systems. This connects with another broader safety theme. New Atlas notes China is moving to ban so-called hidden or flush door handles, citing potential safety issues in emergencies. Teslas are among the vehicles commonly associated with that design trend. Takeaway. Investors should watch whether safety agencies or major markets adopt rules that force design changes, because even small hardware revisions can add cost and complexity at scale. Story 5. Europe is getting tougher. Chinese brands are taking share and BYD is beating Tesla in key data points. Hook. In Europe, the competitive pressure isn't theoretical anymore. Chinese automakers are taking meaningful share, and BYD's Germany registrations reportedly doubled Tesla's in January. Context. Europe has been a critical market for Tesla's growth story, particularly with local production in Berlin. But the region is now facing an aggressive Chinese export push, especially in electrified vehicles. Details. Les Numériques reports Chinese automakers reached 9.5% of Europe's new car market in December 2025, roughly 1 in 10, doubling in a year, according to Dataforce. And a Yahoo Finance-style report in Chinese sites German KBA data showing BYD registered 2,629 vehicles in January, up more than tenfold year-over-year, while Tesla registered about 1,301, putting BYD at roughly 2 times Tesla's registrations for that month. Impact. If Tesla is losing share in Europe, it can mean more price pressure, higher marketing or incentive spend, and potentially lower utilization at Gigafactory Berlin, all margin negative. It also challenges the narrative that Tesla's brand and charging ecosystem automatically win in mature EV markets. Chinese competitors are improving fast on price to feature and supply chain efficiency. Takeaway. Watch Europe pricing, delivery lead times, and any inventory build. If Tesla responds with more price cuts, the stock may react negatively on margins even if units hold up. Story 6. China's EV market is slowing, and that affects the whole competitive landscape. Hook. China's EV slowdown is persisting, with BYD posting a near 2-year low in sales and multiple brands seeing sharp month-over-month declines. Context. China is the world's biggest EV battleground and a major export base for the industry. A softer domestic market can push Chinese manufacturers to export harder, which can intensify competition in Europe, Australia, and other regions where Tesla sells. Details. CNBC reports BYD and at least 6 major Chinese EV brands saw a sharp drop in January compared with December, with BYD at a near 2-year low. Impact. For Tesla, a cooler China market has 2 competing implications. 1. If the overall EV market slows, Tesla's China demand and pricing could face pressure. 2. If Chinese competitors need growth elsewhere, Tesla may face more aggressive price competition globally. Takeaway. Pay attention to export trends and discounting behavior from Chinese brands. The biggest risk to Tesla margins over the next year may not be a single competitor, it may be a sustained global price war. Before we wrap, one quick strategic lens. Between the cheaper Model Y trim and the intensified push toward subscriptions for full self-driving, Tesla is trying to balance 2 levers: protect vehicle volume while increasing software monetization per car. That's a logical strategy, but it becomes harder when regulators, safety headlines, and aggressive new competition all hit at the same time. That's it for Tesla Daily News Podcast for February 6, 2026. Recap. Tesla is leaning into a lower-priced Model Y all-wheel drive to support demand, pushing harder on full self-driving subscriptions ahead of February 14th, facing renewed autonomy scrutiny in the U.S. Senate, dealing with safety narrative risk in the news cycle, and confronting a tougher competitive picture in Europe as Chinese brands accelerate. What to watch tomorrow? Any further clarity from Tesla on full self-driving ownership and subscription terms, any follow-on regulatory signals from the autonomy hearing, and European pricing moves, because that's where margin expectations can change fast. If you found this useful, subscribe to Tesla Daily News Podcast and follow for your daily, investor-focused Tesla Roundup.